Global expertise from San Fran to China. We are core consultants, not your average miner. DSC and Darba now confined to the house. And so now we bring you core from the couch.
Hello everybody, I'm here from Core Consultants from my couch in Tel Aviv. I'm joined by Ross McElroy from Fission Uranium, who's in Canada at the moment. Hi Ross.
Good afternoon. He's from where I'm at, in Western Canada.
Western Canada, all right, so good evening from where I'm at. So you've had some interesting times or fortunate times. Firstly, the uranium market's actually increased, which is surprising given the oil price. So that's been driven up, presumably by the Kazakhs going offline. What do you make of that?
Well, yeah, I mean, I think what it's really showing is just the fragile nature of the supply of uranium. You know, it's there's so much uranium comes from so few producing mines, and I mean, a lot of them come from pretty questionable jurisdictions anyways. You know, I think the real issue is really with the COVID-19 causing disruption and, you know, having to temporarily shut down mines. It's also maybe a convenient reason for mines that are not particularly economic, you know, to be turned off as well. So, you know, I think there's some advantages. Some companies taking advantage of the situation to bring their uneconomic production off. But also there's some very high quality mines that have come off too. And I think what it's really showing is, you know, we still have power requirements. There's still electrical need out there. The reactors still need to operate. They need to run. And the supply side, I mean, we've been flagging it for years and years. I mean, as long as I've been in this industry, 30 years, I've heard a lot of the same comments. You know, the supply side is it's really quite fragile, and I think we're really seeing the effects of it right now with shutting off the key players. I mean, even in Canada, there's no production now. Canada was ranked, you know, number 2 in the world for supplying uranium. Now there is no production. So it's, you know, that's just by shutting down the last remaining mine, Cigar Lake. You know, last week Cameco made the decision. So it's pretty interesting. The prices will go up. You know, this is really the solution to the uranium issue. Is the price of the commodity has to go up significantly, and this is pretty much for all players, and that's what's happening. So the demand is still there, and I think it will be an ongoing demand, and the supply will continue to tighten as the prices are poor, and that's why we've seen, you know, uranium prices creeping up, even more than creeping up. I'd say the last couple of weeks they've
really spiked.
Pretty strong increase.
Yeah, it's really spiked. But do you think these prices are sustainable if we sort of cast ourselves forward, if we can imagine a post-COVID-19 world where production presumably comes back, or maybe it doesn't?
Yeah, well, I think even you know, pre-COVID-19, we had Cameco making the decision to turn off McArthur River, and they'd made comments that this is one of the world's best high-grade uranium deposits. It was turned off due to the low uranium prices. They mentioned that they weren't going to turn that one on until the prices of uranium were close to $50. That may be the minimum target for most of the uranium projects, and this is the highest quality one. The lowest cost operators need that kind of price environment. So, you know, I think that there's some substantial improvement in the price, and that, you know, that will be required, and that's in order to keep the lights turned on for all parts of the world. You know, nuclear is such an important part of the electric grid worldwide.
And tell us about your project. You're involved with the RRR uranium deposits. I see you just got funding from Sprott, which is congratulations during this time. It's excellent.
Yeah, no, we're very pleased to have that. Just a little bit of background on the project itself. So you're right, the project is called PLS. The deposit is the RRR deposit, and it's a large, high-grade uranium deposit. It's in the Athabasca Basin, which is recognized worldwide as being the premier geologic environment for hosting high-grade uranium deposits. And really high-grade means economics. So if you have a high-grade deposit, generally your economics are superior to a deposit that is very low-grade. So we made our discovery back in 2012. We've been able to get it up to the level now where we've just completed a pre-feasibility study. In fact, we've completed 2 pre-feasibilities in 2019, because there's different ways to look at mining this deposit. It's the advantage that it has over everything else is that it's near surface. Being near surface, you know, we could look at extracting it as an open pit conventional mine or going underground. We've pretty much settled on an underground scenario. We looked at the details of both, and really the underground would be the way to go forward. First of all, it's a lot less capital intensive, so and quicker to put into production. Probably some advantages on the permitting and regulatory side by going underground as opposed to an open pit. And it's still going to be one of the lowest cost operating uranium mines in the world. So that's the stage we're at, pre-feasibility. The next step is to go through with feasibility and all the permitting that goes along in parallel with it in order to be able to get your mine in a position that you receive licenses to build and operate, probably, you know, 3 or 4, well, probably 4 years out from where we're sitting right now. So in the big picture, we're looking at having a project that could be a producing asset by, say, 2027. And to get your point on the financing, yeah, we've just recently had completed an agreement with Sprott lending that, you know, for 10 million US, so Canadian dollars is around 14 million. That'll go a long way towards us being able to advance the project on on the feasibility study, which will be upcoming hopefully we'll be able to get going on it this summer, and on the permitting that's required as well.
Okay, fantastic. And you know, it's something about which always comes back when you speak about uranium, and everybody thinks of the natural nuclear disasters and the volatility in the uranium price. I mean, I remember myself as a junior analyst, I think the first recommendation I ever made was Uranium 1, and that was back in 2005. And I think the chief investment officer was like kicking himself for hiring me because it was so volatile, the price of uranium. Do you think that this level of volatility is now behind us in the uranium market, given what's happened, given the amount of supply that's come off?
I think it's still a volatile market for the reasons we were talking about earlier, in that you have very few projects that actually supply a lot of the uranium to the world. And you know, there's different reasons for volatility. Right now, it's obviously COVID-19 is a huge component to the volatility, but you've also got uranium coming from pretty questionable jurisdictions. You know, you have a lot of African supply. Some countries are, you know, the politics there might not be, you know, what long-term people are, you know, long-term focused people are looking for, you know, say utilities. So there has been a lot of volatility in that market anyways. And I think that the fact is the price of uranium is just so low right now that nobody's making money at it. Until you get to a base level, probably $60 to $70 a pound US for uranium, I think that the supply side will continue to be quite fragile. Now, the advantage for us being in Canada, in the Athabasca Basin, because of these high-grade deposits, you tend to be the lowest operating on the cost curve. So, you know, if you can get your mine into production, it's probably the most inexpensive uranium to get out of the ground. And so, you know, I think that we'll always be in an advantageous position to be a supplier, no matter where the price of uranium is on the cost curve. But it still needs to see significant improvement, really, for any uranium to be turned on. For any mines to be
just to interrupt you, so the price of uranium is around $29, $30 per pound at the moment.
Yeah.
So at this level, do you think most in the basin are making money at this level, or not yet?
No, probably not. You know, I think if you see the reasons that Cameco shut down the McArthur River project was, as I say, the world's best high-grade uranium deposit. If this is Cameco, if they need price of uranium to be $45 to support that deposit, it kind of tells you what prices you need for other deposits that maybe aren't quite as good. I mean, it's orders of magnitude higher grade than pretty much anybody else has. So, you know, that it just tells you that the price has to be probably double from where it is right now in order to have, you know, any new meaningful production come online. That's my thoughts. And so I think that is where the price is probably headed.
Okay, that's great. And maybe just a little bit more on Fission Uranium on your project. So you've got feasibility expected this summer. So it sounds like you're advancing the project well despite the COVID-19 conditions.
Yes, we are. Well, there isn't any work going on in the field right now, and that's probably true maybe globally. You know, there's very little work going on many projects. You know, our plan was really not to be doing any field work until this summer anyways, be it July, August. So, you know, our outlook is still more or less the same. I'm still planning for a summer program. You know, maybe it's pushed back till August, September. You know, that we'll see how things go. We'll have to monitor it and play it by ear. But and that would be the start of our feasibility work for this summer. But you know, we'll just have to wait and see how this pandemic plays itself out. You know, we're hopeful that, you know, in a couple of months it'll be a different world again, and one that we can get back to working in some, you know, form of what we call normal in the old days.
Right. Okay. Well, thank you so much for that update. Is there anything else you want to add to that before we say good evening? Or okay.
Well, I think that you know, you want your viewers to really pay attention to the uranium market. You know, I mean, I think we're obviously a significant player in there, but uranium has, you know, a lot of the analysts and people that follow it have been calling for these higher prices for quite some time. And what are going to be the triggers that move it? You know, this is just the latest edition of a number of factors that have been causing the price to go up over the last couple of years. I think this is a real accelerator for that price. But, you know, if you have a position in, you know, in a solid company with great uranium assets, you know, I think that's a good place to be. And, you know, the price of the commodity, you know, if you have an upturn in the price of the commodity, the share prices tend to follow quite closely with that price of commodity. So it is something that you want to certainly pay attention to right now.
Thank you very much for that.
It's been great talking to you. Thank you.
Great talking to you. Stay safe.
Cheers. You too.
Thanks. Bye.
Bye.